Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Wednesday. It is the 1st of May. We are officially in May now. Well, hey, one day in the books, sell in May and go away looking good. So after the Fed announcement, which really was not much, nothing changed. I guess maybe traders were really hoping for a rate cut. I don't know how realistic that was, but we did see some pretty good selling after the Fed announcement here today. And hello, Amy, good to see you, my friend. Hope you are doing well. Welcome out, everybody. Hope you had a good day in the market and outside of the market too. It's still cold in Utah right now. It is not. It is unseasonably cold, I think. At least it sure feels like it. So a lot of selling. Apple, of course, came out with a pretty positive response to their earnings. We're able to close in the green, but for the most part, it was pretty much selling, and more selling after that announcement. Hi, Em. Hi, Patricia. Anita, good to see you guys. Hope you are doing well. Another busy round of earnings. We have about 50 S&P 500 companies reporting earnings either tonight or tomorrow. Not particularly enormous names. Tonight we have Qualcomm, MetLife. You know, certainly these aren't small names by any means, but they are not the Apples and whatnot of the world. We have about 20 coming out here tonight, and then tomorrow before the open, we have around 30, Dow DuPont, CI, ICE, so definitely some names. I think, Coach Jim, Wayfair is reporting earnings either tonight or tomorrow too. I think I saw that earlier. I know that's one that you or at least were keeping an eye on. So, hey, Thiago. Hi, Lauren. Good to see you guys. I hope you are well. So moving into the broad market, we're still working through earnings, but we passed the point of no return. We're starting to wind down after this week, but busy tomorrow, no doubt about that. Over in the S&P, basically normal day, gapped up on the open, just kind of hanging around back and forth. Fed announcement or lack thereof comes out, and quite a bit of selling immediately thereafter. Of course, along with that, we had a nice pop over on the dollar while we saw the metals sell off as well. I'm not going to freak out about this by any stretch, but maybe this could be a little bit of a pullback. For the first time in a long time, we actually closed below that 9 EMA on the S&P. I saw Square tonight. It looked like they'd missed at first glance, and W tomorrow. Yeah, earnings season it's not boring, right? So first time in a while we actually closed below that 9 EMA here on the S&P 500 at this resistance zone. I would love this to be the catalyst for a bullish retracement. I'm openly rooting for some selling to finish this week out, hanging out of that resistance zone in the broad market, not a day below the 9 EMA in April after our initial, our pullback opportunity. It would be nice to get a pullback. Today's candle makes me think maybe, although I'm not too terribly concerned about it just yet, but certainly a lot of selling off of that announcement. Certainly don't think you can look at this as a bearish signal right now, but I'd understand if folks took some profits or something along those lines. So not a lot changing here, but we are, pretty bearish looking candle at resistance. Let's see how we respond tomorrow before we get too excited. Is my personal philosophy. Everything's going to look this way, by the way. Everything's sold off that last couple hours of the day, and really nothing was left unchecked. For the most part, it didn't change things dramatically, but we did see some interesting things developing in a couple of areas, most notably energy. We're going to have to take a look at a couple stocks over there. But before we do, Dow was not going to get away. Hey, Whitney, good to see you with that selling either. Very much like the S&P, just kind of a day until the selling began after that Fed announcement. And again, who knows what it means. I know that the first response was yuck by traders. Hey, Scott, good to see you. I'm not concerned about it at this point in time, but we'll see. We'll see. Maybe I should be. Then there's going to be some opportunities to go to the downside too for us. If we want to look that way without being bearish in the market, right? So. Yeah, I'm hoping for a pullback, no doubt. NASDAQ, again, it kind of got in on the action, a close below its 9 EMA for the first time in quite some time, very extended to the upside. Of course, Apple having nice earnings really kind of got things going early, but it just was not meant to be here today. Over in the NASDAQ, I mean, we're still above everything, so I don't know how you can make much of a bearish case. Sure, I can say I don't want to buy something tomorrow. I probably don't. I kind of want to let this shake out a little bit, but I can't see how you could be too bearish just off of this one day's movement. Over on the RUT, getting pushed down off of that resistance. It tried, it still may try again, but now we're a couple days in and that 16 continues to hold for all of those condors. I imagine most of you here are much like me. We are not brokenhearted at all to see the RUT struggling below 16 as condor traders on the Russell Index. Loving the way it's going. Support, we do know that we have a pretty good level of support. We got a little ways between here and there, but we do have a pretty decent level of support off of this swing low at around 1560. So we'll keep an eye on that one. But really, I mean, at this point in time, probably the best thing to say on the RUT is it's going to be somewhere in this range tomorrow, because that's probably the safe bet. So overall, the trends remain intact. We did see a little more selling than we've seen. We can either do one of, I guess we have a few options. We can just watch and see. We can look at it. Hey, we've been wanting a pullback. The one thing I always find funny, and it happens to all of us, we want a pullback until we get one, and then we wonder, is this a pullback? So, I'm going to be looking at overall as a pullback opportunity. I hope tomorrow we have a little more selling, not quite as violent as the end of the day selling, drifting down into a doji on Friday. So we have some awesome retracements coming out of earnings season next, coming out of this big earnings wave next week. We'll see. But RUT, it is still there. Yeah, I'm with you, Em. No tears. It can live here. It can absolutely just set up shop, spend the rest of its days in this little trading range, and I am perfectly fine with that. So we did see some pretty steep selling in the materials, and unlike some of the other areas, this kind of started happening early. Now, we looked at that 20-day SMA, and that's always what, I hate when we're below those averages. They can act as those resistance zones. So we were kind of getting pushed down over in the materials sector early before the Fed announcement. Once that got going, we really started to sell off. Pretty ugly candle. I'm still not scared though, and maybe I should be. If I look at this weekly chart, this looks like a beautiful pullback within a sector that, generally speaking, I do like, and I'm still looking for it from that perspective. Not tomorrow. Certainly, I'm not the type of dude, as you guys know, to buy anything after a candle that looks like this, but using this old resistance and this 50-day moving average, kind of that primary level of support. But you saw, as we looked at that weekly chart, a break below that would be a little bit of a red flag for sure. And I can understand some selling there. I wouldn't want to buy if we fall through that support in the short term, but the trend is still very much intact. So for me, I'm really liking this as a pullback opportunity, especially if we can hold that 50-day SMA. As of right now, if we have that huge bounce back day, now we can use this swing high from yesterday and today as kind of that resistance catalyst. If we push through that, should have some room to the upside, but hopefully we kind of simmer down within this range in the next couple of days. But we did see some pretty good selling over there. Now, really, yeah, there was some stop losses hit today, and not a bad thing. You guys are with me for the most part. For those of you who I've talked to or seen around, most of us want a pullback, so I don't think any of us are too terribly sad about that. I don't know. I know I'm not. Energy, it's ugly, and it really concerns me. We've been in this range. We sold into this support level today. The only reason I'm not really wanting to get into bearish trades maybe as early as tomorrow within the sector, as it was holding its own, hadn't broken that support level until we saw the selling that began market wide on the Fed. So I don't quite trust this as a break at this point in time, but we are right there. And if this does push down, certainly, I'm going to have to, put at least a little bit. I don't think that's a super strong signal, but I do think it's enough to pull off of it from a bullish perspective. How bearish? I don't know, but bullish, I think you have to kind of throw in the short-term towel from a bullish perspective if this range gives out. Let's see how it responds tomorrow. It really was holding up right at that support level, as you saw, before the selling began. Now, it doesn't matter how we got here, but if we have a snapback in the market where its support might be interesting. But the problem that we are potentially running into in the energy sector is the ETF's hanging on by a thread at that support level. We've already seen Exxon break, on earnings that didn't light the world on fire by any means. We've already seen Chevron gap down on gap down on its buyout back up, and pretty ugly. Now all of a sudden we're making lower highs and lower lows, looking like maybe a little bit of a double top kiss goodbye pattern here. If I zip this guy out right there, not a great look, breaking back above there. Okay, we'll talk, but not a particularly bullish looking chart. I think most folks would agree with that. ConocoPhillips already broke down off of support, and these are, the biggest names in this sector. EOG just been selling off like crazy because it just seems like EOG can never be trusted, for me at least. So Oxy already broken down, working into another level of support. SLB kind of hanging on by a thread at its support. So, I mean, these charts are not pretty. And so I have a hard time thinking that, if this support breaks, we're not going to see some more selling over in the energy sector. I do think we need to be careful from a bullish point of view. Let's see how that movement goes tomorrow. If we take this support level out, this intraday floor, there's really not a lot. I mean, it's kind of one of those things that if this support does give out, there's just not a lot of great reasons technically to be buying some of this stuff, in my eyes at least, in the short term. Even going into a weekly time frame, we've got a ways to go until any sort of moving averages as well. So got to be careful, I think, with this area right now. And I think at this point, if we're going to get that bullish run, it's probably A, going to happen without me, or B, going to have to wait until it breaks out to get me back on board. I don't like the way these charts are looking. I don't like the way it's behaving. We'll see, but yeah, not an area I'm going to be looking for some sweet deals on a pullback. That is for sure. Right or wrong, that will not be what I'm looking for, or if we do get that pullback opportunity. Financials caught up in the same deal. We're holding our own all right. Ultimately sold off. Hard not to still like this area. Unlike the materials, that's at least closing in on some support. The energy, which is arguably broken or threatening to break support, at least. As long as our breakout point here holds on financials, I will absolutely be looking for buying opportunities later in the week, or preferably next week. Hopefully two more days of selling going into Monday. But as long as we're above this breakout point, this will probably be one of my favorite bullish areas. Energy, not my favorite bearish area, but it could be that fairly quickly if it gives out on that support level. Industrials, again, nothing really changed here. Still holding that support level. Do think we can look at this as that support level if this is to give out, if we do see more selling in the market, because that might be the way that it goes. This should be the support, in my opinion, that holds us up. If that one does give out, probably not hard to see it working back into 75. Now, I expect that to continue to hold, as you guys know, but I think that's where we can go with this. I think with the upward movement that we've seen this past 4 trading days off of that gap down, I think, for me at least, I'm really comfortable saying that should be our support level over in the industrial sector. Technology was cooking today until, right? So until everything else gap up. Apple, of course, earnings, definitely a positive influence, but much like the rest of the market, got caught up in the late day sell-off post-Fed meeting. Not a bad thing at all. Certainly not a good looking candle by any stretch. I mean, when you see candles like this, it is hard to be excited about buying tomorrow. In my mind, any type of tomorrow buying would almost have to be breakout type of trades in my mind. the pullbacks just won't be there. They were certainly too violent for my tastes, at least here today. But unlike certain other areas, we were able to still close above that 9 exponential moving average somehow over in the tech sector. I guess we had the head start gapping on the open with along with Apple. So still an area could be very interested in the coming days, but much like the rest of the market, it's, well, at this point in time, we need some sort of turnaround candle, right? If it's tomorrow, it's tomorrow. If it's a little bit later, then that's probably better. Over in the staples sector, again, really did us a good favor from a pullback point of view. I think we had that very clean break yesterday, and again, much like the overall market, most of the selling, we were drifting a little bit, but most of the selling was along with the broad market testing this general area, this general breakout point. So I do believe that this, again, today, no new trades probably tomorrow, bullish ones at least, but where we settled in, where we are in our trend, I mean, as long as we're holding this swing low, our trend is very much intact in my mind. Would like to see this breakout point play some defense, and it did. That 57 mark kind of caught us here today. Again, at least need one more day, but a pullback area for me, and I'll remain bullish in looking for opportunities as long as we're holding this, old breakout point, this swing low. I'm very comfortable saying that we shouldn't go below there from that bullish perspective. So we're getting some pullbacks, and the funny thing is, if it's in 2 days, we like it a lot more than all in one setting, right? So at least I know I do. Over in utilities, not a lot to see here. Smack dab in the middle of this trading range. Eventually, we will come out of this trading range, and I do believe that that's going to be a decent signal for us, either continuation of the upward trend, or maybe we need to pull back some from 57 if we do falter there. But right now, as long as we're in this range, I mean, not anything to do other than cash flow trades or collect that dividend if you're holding any of these utility stocks, in my mind. Still doing the battle here on the healthcare sector, and some of these earnings have been a little bit better. Humana had a little bit better, although not a great response to their earnings. CVS had a decent earnings report, so the earnings have been, I don't know, good is probably too strong of a word, but I don't think they've been terrible within this sector. Now, we basically are still, in my mind, in the wait and see mode. I mean, we are basically doging on the weekly at the old support level, at that moving average stack that we have sitting right above us. And that is a moving average stack. There is no doubt about it. Don't think we have the confirmation overall for selling, although it is out there. We have things like ISRG that, of course, missed earnings, and then rallied that up. Saw some nice downward movement on Monday. I think I threw this one on Twitter. I hope I did. I think I did. I think I remember putting ISRG on Twitter on Monday morning. So we are seeing things showing some downward movement. You have CI, one of the bigger companies in healthcare, or at least one of the upper mid-sized companies reporting earnings. So don't think we've got enough information to really say, yeah, we're ready to go one way or the other. It's going to have to sell me on the break to the upside, but once it does, if that's the way it goes, I think you have to show it a little more bullish respect than we've been showing it lately. On the other side of things, much like we've talked the last few days, as long as we're rolling up with this rising 9, not quite ready for that retracement across the sector. And I think it probably, and just kind of looking at some of the individual components within the sector, I think it's probably starting to get back into dealer's choice. I'm not fundamentally opposed if we break above that resistance for bullish. I don't necessarily expect the whole sector to move as dramatically together as it was there for a while. You have Johnson & Johnson broke out yesterday. You have UNH, though, still very questionable on a bearish retracement. You have Pfizer, nice little pop on its earnings. We got stuff ahead of it, but it had a decent little response to its report. So we're still seeing things that are looking okay, things that are looking, Abbott basically back to where it was when it started. It was unfairly beat up, and it's got it all back. Crazy move there. So I think probably for me, kind of stepping away from bearish on healthcare to looking for bearish opportunities in healthcare, not so much it's all bearish. Maybe it will be, and certainly I'm not buying it, from a bullish perspective unless we get above that old support level. But I think with the way these charts are looking, I think it's some of the pullbacks are still very much intact. Some of them are kind of taken out in my mind. Some of the earnings have been a little bit better than others, as of course you would expect. So this is where our battle line is. Break to the downside, I think, is a pretty good signal for the selling within this area, but not across the board. I think it's done enough for me to kind of come back to that philosophy, as opposed to don't touch healthcare with a 10-foot pole that I've had for a little while, from a bullish point of view at least. Over in discretionary, much like the market, just kind of sold into the 20 here today. First line of defense should be this old resistance level at around 118. That support level should be, kind of that first line. Well, the 20 very easily could be the first line of defense, but from a price perspective, around that $118 mark should be the first level of support. But again, if we look at this from a weekly point of view, even a little bit of a further pullback would not necessarily be a bad thing. So, there's a little bit of room for, the tech sector and the discretionary in particular, in my mind, to pull back a little deeper if they want to, simply because of how strong they have been. And they're not going to be taking out trends with a little bit of a deeper pullback. So tomorrow, again, it's going to be hard to get too excited to be a bull for me tomorrow. And any bullish trades are going to have to be kind of the breakout variety if I'm looking going into tomorrow. Real estate broke out of that, and it was really cooking. Poor real estate. It it broke out of that resistance level that it established, and we really saw some nice upward movement as buyers. Yeah, we're good. We can trust real estate again, and then the market sells off. Now, as you can see, it really kind of settled in, whereas most of the other sectors kind of continued to drift towards the close. We really did kind of settle in the last hour or so of the day at that old resistance level. You have, there are a few actually real estate companies coming out, but one of the larger size is reporting either tonight or tomorrow. I think you have to look at that as a overall positive signal, not a great looking candle, obviously a big old gravestone looking thing. But I do think that pushing through that is going to make buyers a little more comfortable. Had we closed above that, we're kind of right there, I could understand a little upward movement, people wanting to move back into the REITs. Probably not one of them, but I would understand. We certainly saw folks moving in quickly or early and often, really early in the trading day, just picked a bad day to break out of that little resistance level. And of course, over in the communication services, just kind of hanging out. We all know the story here. Google with its earnings miss is certainly not a positive influence. Pretty ugly looking chart, at least short term. We've broken, of course, a big gap to the downside is never pretty, but we were really fighting at that 50 SMA yesterday, clearly breaking it here today with a little bit of a support level not too far away from us. So that should be a price where we get a little bit of insight how much do people really dislike this earnings report. I think that might be a test for folks, especially with the 200-day moving average just a hair below it. But we sold off over there along with the overall market, and it was struggling early. It wasn't all the market's fault when it comes to Google. So no surprise, that's exactly what we're seeing here over in the communication services ETF. Still have plenty of names to report earnings either later this week or early next week in this space, but nothing really to be too terribly concerned about from a bigger picture technical perspective. Really above this 49 or within these moving averages could be an interesting thing. The only issue is, if Google is going to continue to sell, as we've seen many times, it doesn't have to help, but it's really difficult when it hurts, right? When it comes to Facebook and Google, we don't need them with us, but it's really hard to have them against us when we're talking about this ETF. So, a pullback area for sure. I'm probably going to like some of the other areas better. But I don't know. That's not necessarily quite as true as maybe it would have been a couple of weeks ago. I know overall I'll be looking for pullback opportunities, but we do have to kind of be careful. This is a kind of an area too where we're seeing a little bit of this and a little bit of that. You have things like AT&T that big breakdown. Verizon looks very similar wherever they are. There they are. Google. We all know how ugly Google is looking. Verizon actually looking like a pretty interesting bearish retracement right now, actually, and to my eyes at least. But you have things like Facebook. Very nice. I mean, even held up pretty nicely here today. Everybody's favorite was it Comcast? I mean, Tim's favorite Comcast. I know he says shorted all the time, but I think he's joking, and just complaining about his internet. So holding up nicely. He had Charter that really broke and started to try to push on earnings, just wasn't able to do that. So a little bit of both within this space. You guys know how I view this sector as a whole. I don't really like the ETF as a vehicle simply because my brain is not willing to accept that they all belong in the same bucket. Maybe one day it will. Not here today. So for the most part, we're working into some potential support over in the material sector. I think that's one of the big takeaways here today. This is, this should be a particularly strong level of support. This was a major break, a major pivot point, a major breakout point. The 50-day moving average is here. That should be a pretty impressive level of support, in my mind at least. That's very interesting to me. Energy, is I'm about ready to call it a break. Not yet, but I'm pretty darn close, and I wouldn't argue too much against somebody who said I'm too wimpy and I should do that at this point in time. We are getting some pullbacks. We are going to get some potential breaks, and I think probably the best way as we're moving into the second part of the week or last couple of days is to be very open to bearish trades. I know RHI, and there's others too, but RHI from the options report was triggering again early today. I snuck in really quick. I was pretty busy. I wasn't able to hang out in the halftime report, but I did sneak in really quick because I saw these guys were triggering, ultimately closing below that support level. So there are going to be some trading opportunities out there to both sides. Certainly there's some bearish, opportunities if we want to sell a little bit more. What is it? No, PSX. One more. Over in the energy space, already broken to the downside. So there are going to be opportunities if we're looking for some bearish plays. I don't think we have to be bearish on the market to be open to some bearish plays. And if we are going to have a pullback and we have some of these areas that maybe aren't necessarily particularly strong, or individual stocks that aren't particularly strong, well, why not to at least be open to the idea? At least is how I will be looking at it going into the second part of the trading week. Of course, over on the dollar, really nice candlestick, so we had that break. We pulled back a little deeper than maybe traders would have liked, but maybe just enough to scare them away. Whatever it is, a very strong looking candle here. This is a, run-of-the-mill stock. Oh, nice pullback, nice big huge hammer, a little upward momentum. I would expect some upward movement. Those are what my expectations are, of course, and certainly most of that did happen off after the Fed announcement, of course, the big impact on the dollar. But the ultimate result is we have a pretty strong looking candlestick. I'd like to see us get back above at least today's high before I get too terribly excited. But as you guys know, I'm looking at this break, this recent break, as a overall bullish signal in the dollar, and so something like a UUP, and certainly if you're doing intraday stuff can work too. But if you're more of a swing trader, working with stocks or ETFs, you of course have UUP that's going to track that. Could be interesting, not a particularly huge mover, but such as life. I really think this hammer is nice. Little upward movement, I think, can be argued as confirmation that this is a bull pullback and traders are ready to get back into it. That's certainly what I will be looking for. Of course, on the other side of the coin, you've got the dollar popping off of the Fed announcement, and of course, you have the metals dropping off of the Fed announcement. And that's why I'm not going to get too crazy. It's been a while since we had a huge move, or at least it's seemingly on the Fed announcement. Again, I'm not quite sure why everyone thought rate hikes were likely. It seems like they did. I certainly didn't, and most people I talked to didn't think so either. But I guess it is what it is. Still hanging around that support level here. Not ready to say that it's a break. You guys know where I'm at when it comes to breaks. If you were looking at this as a bearish retracement, I know some people were. Not everybody was. I just had concerns with the way it behaved after it broke that support level. Definitely some nice movement for you on that bearish retracement side of things. If nothing else, we can kind of use this high as our new swing because, well, I think for me at least, we can say that, yeah, we did. Let's see if I can do this. We did stop going up and we did start going down. And so if nothing else, I think this 1290 becomes that new first level of resistance that we're working with. Still overall bearish, but still honestly, I don't think this is a great environment as a swing trader for gold in particular, the metals overall, but gold in particular. Silver, on the other hand, you could make a case. We certainly broke down. We did take out that intraday low, which I think you can call, if at the very least, a bearish signal. Whether it's a tradable signal or not, that's probably up to you. But I do believe failing at that support level is another bearish signal. Much like gold, I think we now know that $15, as if we didn't know that before. We had quite the dance, but $15 is kind of that first level of resistance for me. Pretty bearish, development in my mind, closing below that floor. Trend, of course, has been down. Not a lot of support. I mean, there's all sorts of little things. 1450 kind of jumps out as the first real potential support level in my mind for silver. So again, for me, if I'm trading bearish within the metals, I'm still sticking with silver versus gold. I think it's a little easier to work with chart. Over in natural gas, another day, another short-term bullish signal. Closing above that 20 SMA here today, as we've talked the last few days, has turned this 9 and started to use it as support, and that's always something I keep in mind when we're moving. Hey, that can, and we've seen it, just on natural gas, act as a little bit of a catalyst. So as long as we're, seeing this 9 rising, I think we have to not be looking at it from a bearish retracement perspective, or better way to put it, it's not there. If I'm looking at it from that bearish retracement perspective, I don't think you could argue that it is today to be looking to jump into it. At the very least, it is going to need to get back below that now rising 9 exponential moving average. For me, I'm not looking at it from that perspective whatsoever. You guys know the story with me. I'm not sold. I wasn't sold last week, and today, this week's price action has done nothing to make me think that it's broke down yet. And so for the breakdown, I still believe this is not a great bearish retracement. It might end up being one, but I don't think it's one. I think the real bear signal is going to be taking out those lows of last week. I still believe that. I'm not looking at this as a bearish retracement opportunity right now in natural gas at all. It has shown some pretty decent strength. I think you have to agree over the last 5 trading days. First, taking out potentially the little floor on the intraday that might have been, that 250 area or range, then close above the 9. Now we're above the 20. We are showing some strength, at least short term. At the very least, I think we can argue that today's candle doesn't lead to tomorrow is the day that the bear retracement should be ready to rock and roll. At least for me, it does not. And lastly, over in crude, just continuing to hang around. We're in that weird spot now. We've got a pretty respectable support zone, in that 63 ballpark. And now we have these this 20 SMA acting as a resistance catalyst. We tested resistance yesterday, of course, very quickly on the intraday. I think at this point, you're still waiting for it to come out one way or the other, unless you are specifically playing it on the intraday, in which case, sure, there's going to be some really good opportunities, I would imagine. But swing trading wise, I think until we come out one way or the other, I think it's a stay away, quite honestly, at this point. If this support zone does give out, there really isn't a lot until we get into that, $60, $61 range to try to catch it. It doesn't mean nothing can catch it, but we don't have a lot. Still could very easily just be a little bit of a retracement too. So I don't think it's decided what it wants to do with itself. We are very much in a trading range. And the signal, will be a break either way, whether it's a tradable signal for me or for you. That's probably going to depend on us, but I do think that's probably what we're waiting for. Now that we're below these averages, we've got that 9 falling. I have to worry about that potentially being a little bit of a short-term signal with the 9 crossing below the 20, acting as a potential resistance catalyst. But the trend still is up. I have a hard time saying let's be bearish on crude, even though there are some short-term signals to the bearish side, I would argue. I don't think they're tradable signals personally. So stuck in the range for at least one more trading day over in crude. So, I mean, it was interesting. I mean, we certainly saw more selling than we have seen as of late. And again, I'm not going to be too terribly concerned about it. Do I think it could lead into some more selling throughout the rest of the week? Yeah, I think it's a good idea to kind of mentally prepare for that. I wouldn't be surprised if that's how it wants to go, but you flip it around on the other side. I mean, our trends are still intact. We're still fighting, at darn near all-time highs. The most bearish thing we could say, we had a big red candle, and it wasn't even that. I mean, we didn't even close down 1% on the indexes here. It's hard to get too terribly concerned about it. I would love a pullback. That is certainly what I am cheering for. I'll be looking to, some potential bear plays if we do get that pullback, to maybe be looking to work into that way. And if I'm completely wrong and it's more than a pullback, got a couple bearish plays going on that are probably benefiting from that might be able to benefit even if the market snaps back tomorrow, which I don't think anybody should be terribly surprised if that's what happens. The one thing I know for sure is it's not taken much to get buyers back into this market as of late. Is today enough to scare them? I don't think we have enough information. Maybe a week from now I'll say, yep, it was. But right now, I don't think there's enough to say that, yes, it is. But certainly a little more selling than we have seen lately. Most of the part, we're intact. Energy, though, I mean, that's kind of scary. Some of those things already breaking down. I think it's about time to give up on being a bull and go back into at least a neutral stance on energy, to be quite honest with you. Tomorrow's a key day. If we can bounce up and catch that support zone, I'll definitely be open to talking about it. But if we start selling early, break that low, I think you have to be very concerned in the short term, at least from a price perspective, that there's just not a lot to hold us up. I mean, we could arguably have the swing low at 63, and then we have the support zone at 62. There's just not much to prop this sector up if we break down, and it looks like we are knocking on the door, if nothing else. Hey, maybe that will catch us. So we'll see where this one goes. If this was more natural, I would probably be looking at it much more bearish, but knowing how the broad market sell-off impacted the development of that candlestick, I think it's best to err on the side of caution for one more day before I get too crazy thinking about turning from a bull with at least slightly bullish to slightly bearish. Don't want to do that overnight very often, but I think this is one of those times that it could get me as early as tomorrow to do so. So, ladies and gentlemen, that is going to do the market recap on an interesting day. Lots of earnings flying around. Traders using the Fed announcement either as a reason to throw a fit or to take some profits. I guess we will find out which. I lean towards just a good reason to take some profits. Trends for the most part are still intact unless you look at certain areas, hint, energy sector, listen up, you better start doing something better with yourself, or you're going into the bear category, and I don't want to do it, but I will, because it doesn't matter what I want, right? So, ladies and gentlemen, thank you so much for joining me. It's always more fun to do this with you guys than on my own, so thanks for hanging out with me, going through the daily routine. Of course, if you are new around here, be sure to subscribe to the channel and hit that notification bell. You can, of course, are invited to join us over at Tackle Trading on Twitter. You can find me at Frank Martin23 on Twitter. Let's see, tonight we got a Tackle 25 Mastermind group. Am I right? I'm pretty sure. I've been kind of busy and cold today, so I believe we got the Tackle 25 Mastermind group going on tonight for the team members over there. So you guys enjoy that. Thank you all so much for hanging out with me. Get out of here. Enjoy what is left of your Wednesday. Be ready for another round of earnings. If nothing else, we're going to get a ton of earnings tomorrow to keep things interesting. So should be another fun day in the market. So thank you so much, guys. You guys have a great Wednesday afternoon. I will, of course, see you same time and channel here tomorrow afternoon. Thanks, everybody.